Welcome to the Nifty Noon podcast. Today we're taking a deep dive into what was just an absolutely electrifying week in the world of crypto. We're looking specifically at August 11th through the 15th, 2025. Our mission really for this deep dive is to unpack the most important nuggets of knowledge, the key insights from our sources, which are the daily Nifty Noon market briefings. We want you to quickly grasp the significant shifts happening. Think of it like a shortcut, a way to get truly well-informed about the rapid institutional adoption, corporate strategies, and the groundbreaking innovations shaping this digital asset landscape.
Yeah, exactly. This past week wasn't just, busy. It saw several really critical milestones, things that could genuinely redefine how traditional finance interacts with digital assets. So we'll walk you through it chronologically. We'll highlight what's truly fascinating and, maybe more importantly, why it matters to the bigger picture.
Okay, sounds good. Let's unpack this then, starting on Monday, August 11th. The big headline from our Nifty Noon briefing that day was the Ivy League stacks sats. I mean, when we saw that, it just immediately screamed surging institutional adoption. We're talking Harvard and Brown University making some pretty significant Bitcoin ETF investments.
Right. And what's truly fascinating here isn't just the dollar amount, though that's impressive. It's the powerful signal it sends.
Yeah.
Harvard Management Company, they oversee this massive endowment, over $50 billion. They disclosed, a staggering $116 million investment in BlackRock's iShares Bitcoin Trust. That's IBT.
Wow, $116 million.
Yeah, and get this, for context, this wasn't some tiny, experimental play. Their 13F filing, that's the public disclosure of what they own, right? Yeah. It showed IBT became their fifth largest investment as of June 30th.
Fifth largest. Okay, that's not dipping a toe in. That's a serious dive.
Absolutely. And Brown University wasn't far behind either. They increased their holdings, now owning about $13 million of BlackRock's Bitcoin ETF, too.
That's a huge commitment from both. And frankly, a bit of a shocker for those of us who remember when crypto was, definitely considered fringe. What do you think prompted Harvard specifically to make such a substantial move now? Endowments are usually so cautious.
That's a fantastic question. And Harvard's move is undeniably a major milestone for institutional crypto adoption, no question. For years, you had legal departments, investment committees at these really conservative funds basically slamming the door shut on crypto. Why? Regulatory uncertainty, operational risks, a whole list. But now you have these regulated ETF structures like BlackRock's IBT. They provide a familiar pathway. It's liquid.
Right, something they understand.
Exactly. It allows these, traditionally conservative funds to get exposure without having to directly handle the digital assets themselves. That was always a major hurdle. It's like they finally found a safe and approved on-ramp. So this validates the whole regulated ETF structure. It encourages other endowments, pension funds, big financial players to maybe take a look too.
Makes sense.
And it's not just universities. We're also seeing this boom in what you might call digital asset treasury firms. Pantera Capital, for instance, has invested over $300 million in companies that basically just hold crypto on their balance sheets. So for you listening, it really raises an important question, doesn't it? Are we seeing crypto pivot from being just speculative to becoming a genuinely legitimate part of a diversified portfolio for mainstream finance, and maybe much faster than anyone really expected?
It definitely feels like a shift in perception. Okay, so if Monday was about traditional finance finally getting comfortable, Tuesday, August 12th, brought a huge shift from within fintech itself. Our Nifty Noon, Stripe drops a new beat with Tempo blockchain briefing that revealed another really big development, this time from Stripe. And here's where it gets really interesting, I think, because it's not just about them using crypto. It's about Stripe building their own foundational infrastructure.
Precisely. Stripe is apparently quietly developing Tempo, which is a new payments-focused Layer 1 blockchain. Now, for those maybe less familiar, a Layer 1 is the base network. So they're building the actual foundation, not just an application on top of an existing one like Ethereum or Solana.
Okay.
And they're doing this in partnership with a really prominent VC firm, Paradigm. This isn't just out of the blue either. It follows Stripe's recent strategic buys. They acquired stablecoin firm Bridge and also the crypto wallet developer Privy. And to top it off, Matt Wong, who co-founded Paradigm, he's actually going to be the CEO of Tempo. That shows some serious commitment from both sides.
So why build their own Layer 1? That seems like a massive effort. Why not just leverage existing chains? Doesn't that also bring in a lot of risk, a lot of competition, given how crowded the blockchain space already is?
It's a smart point about the risk, yeah. But the strategic play here is, potentially immense. By building your own, Stripe is positioning itself to essentially control the entire tech stack for stablecoin payments. They want to own the pipes, not just run water through someone else's
Ah, okay.
control.
Exactly. And interest in stablecoins for payments is just surging. It's getting a huge boost from clear regulations like the Genius Act. That's relatively new legislation designed to provide a clearer framework specifically for stablecoins. Makes it safer for companies like Stripe to build in this space. Stripe CEO Patrick Collison, he even testified before the House, talked about the meaningful business interest in stablecoins. So this signals that blockchain-based payment rails, they could become pretty standard. And major fintech players are going to want to build their own infrastructure. For you, what this could mean is faster, cheaper, maybe more seamless digital payments in the future, all powered by blockchain, integrated right into the services you're already using. Wow, that's almost reimagining how payments work. Okay, then Wednesday, August 13th came along, our nifty noon. BitMine's ETH Black Hole Gigabyte newsletter dropped, and this showcased some really aggressive corporate strategies. Reminded me a bit of the early Bitcoin accumulation days.
Oh, yeah, this was definitely a headline grabber, almost kind of like science fiction, right? ETH Black Hole. So Bitmine Immersion Technologies, ticker BMNR, led by Tom Lee, they announced plans to sell up to $20 billion worth of stock to buy even more ETH.
With a billion, with a B.
With a B, their stated goal. To control 5% of the world's total ETH supply. Just for perspective, Bitmine has already accumulated over 1.15 million ETH. That's worth nearly $5 billion, makes them the biggest publicly traded holder of Ethereum. And their stock, it surged over 750% this year alone. So investors are clearly buying into this strategy.
Unbelievable.
And they weren't alone. We also saw other firms like ETHZilla ticker ATNF announce plans to buy over $500 million in ETH. And Metaplanet bought another 518 Bitcoin, bringing their total to over 18,000 BTC.
So serious capital flowing into Ethereum specifically. But it wasn't just about accumulation that day, was it? I remember our newsletter also mentioned Circle, the USDC issuer. They reported, 53% year-over-year revenue growth and a huge 90% growth in USDC itself in Q2.
That's right.
Plus, the SEC resolved its case against Ripple, which removed some uncertainty. And July CPI inflation came in a bit cooler than expected, plus 2.7% versus the 3% estimate. So it feels like a pretty bullish backdrop overall, beyond just the corporate buying frenzy.
It absolutely does.
Yeah.
And this level of corporate accumulation, especially by Bitmine, it could have really significant implications for ETH's available supply. You could potentially see a supply shock dynamic. Think of it like a squeeze, right? If a massive amount of ETH gets locked up by these large corporations, there's just less available in the open market for everyone else. If demand stays high or increases, well, that can drive prices up pretty quickly. And the confidence shown by big-name investors, like Peter Thiel's Founders Fund, Cathie Wood's ARK Invest, backing Bitmine's very crypto-centric treasury strategy, that signals a powerful belief in Ethereum's long-term value. It's a really clear indicator, I think, of how corporations are evolving their balance sheet strategies. They're starting to include digital assets for actual growth, seeing them as strategic holdings, not just, speculative bets. It's a profound shift in corporate finance thinking.
Definitely feels like it. Okay, building on that momentum, Thursday, August 14th was another landmark day. Our nifty noon. Wall Street is feeling bullish. Briefing summed it up well. The public markets really rolled out the red carpet for crypto.
It was an explosive day, absolutely. The cryptocurrency exchange operator, bullish ticker BLSH, had what you'd call a spectacular public debut on the New York Stock Exchange. They priced their IPO at $37, and then the stock just surged. Went up as much as 218% to hit an intraday high of $118. They raised $1.11 billion.
Wow.
And this comes right after the already successful listing of Circle, the stablecoin issuer we just talked about. So this isn't just a win for one company. It clearly demonstrates significant pent-up institutional demand for regulated, compliant crypto businesses. They want ways to invest in this space through traditional markets.
Yeah, seems like it. And it wasn't just about Bullish's IPO either, right? I remember seeing Standard Chartered raising their ETH forecast. They now expect ETH to reach $7,500 by the end of 2025.
That's right, a pretty bullish call.
And the spot ETH ETF saw record inflows. Over $1 billion poured in just that day alone. BlackRock's ETHA, their Ethereum ETF, captured a massive $639 million of that inflow.
Huge numbers.
And Grayscale isn't sitting still either. They're exploring new ETFs. Apparently, they registered for a Cardano and a Hedera ETF in Delaware. So it feels like the floodgates are genuinely opening now.
They really are. An explosive IPO like Bullish's, especially when you see institutional giants like BlackRock and ARK Invest committing capital to it. That's just a crystal clear signal of Wall Street's acceptance, their readiness to onboard crypto companies. It paves the way for a whole new wave of crypto companies to tap the public markets. It further blurs those lines between traditional finance and digital finance, and it shows the infrastructure is maturing rapidly to meet this demand, which, for you, means more familiar investment avenues might be opening up if you're looking to get exposure to this space, maybe without dealing with, private keys and wallets directly.
Makes sense. More on-ramps again. Okay, and finally, capping off this wild week, Friday, August 15th, our nifty noon. Will America ever get its strategic Bitcoin reserve?
Deep Dive highlighted some interesting market volatility tied to regulatory statements. It was a bit of a roller coaster day for Bitcoin, wasn't it? It really was. And this situation perfectly illustrates how sensitive the market is to government rhetoric, right? But also, maybe, the underlying long-term commitment to digital assets, even from governments. So Bitcoin briefly touched a brand new all-time high, over $124,000.
Wow.
Yeah, but then it retraced pretty sharply. Why? Because Treasury Secretary Scott Bessent initially stated the U.S. is not going to be buying Bitcoin for its strategic reserve. That caused an immediate market dip.
Okay, yeah, I can see why that would spook the market.
Right. But then later, he clarified things via social media, said the Treasury is committed to exploring budget-neutral pathways to acquire more Bitcoin. And crucially, he said they would stop selling its seized Bitcoin and would continue to build a reserve using confiscated assets.
Okay, so no direct market buys, maybe, but they are still going to accumulate through other means, like holding on to confiscated assets. That's a really important distinction.
Exactly. And that seemed to calm the market down a bit. It's a more nuanced position.
We also saw the Ethereum validator exit queue. That's basically the line of people wanting to unstake their ETH, standing at a pretty significant 699,600 ETH, worth about $3.29 billion. It's a useful indicator of network sentiment. And more TradFi integration news. Citigroup is reportedly considering offering custody and payment services for stablecoins and crypto ETFs. Plus, MetaMask is apparently expected to launch its own USD-pegged stablecoin, MUSD, this week.
Precisely. So while those direct government market buys might be off the table for now, the confirmation that the U.S. will hold on to its current, multi-billion-dollar stack of confiscated Bitcoin, that's a powerful long-term signal. It shows state-level acceptance, in a way. It suggests a pragmatic approach, integrating digital assets into the national strategy somehow. And for you, it means maybe a bit less uncertainty around the government's stance on Bitcoin as an asset class, despite that initial knee-jerk market reaction. And just continued integration into established financial services, like with Citi.
What an incredible week, honestly. Looking back, the market briefings from August 11th to 15th really confirm a robust period. We saw increasing institutional confidence, strategic blockchain moves by major players like Stripe, and a maturing public market for crypto-native companies like Bullish. We saw Bitcoin hit that brief all-time high over $124,000. Ethereum rallied back towards its previous highs, trading around $4,700 by the end of the week. Even the NFT markets saw some action. Blur's ETH daily volume was up, 156% on Friday, even though OpenSea saw the decline. So activity across the board.
Yeah, this week really showcased, I think, knowledge being understood and applied on a truly grand scale. We've seen serious capital deployed by institutions. We've seen innovative infrastructure being built by major fintech players. We've seen clearer signals from regulators, even if sometimes confusing at first. This shift isn't just about the price charts. It feels like it's about the fundamental and maybe accelerating integration of this technology into the global financial fabric.
So thinking about all this, what does it really mean for you, the listener? Given this rapid pace of institutional and corporate adoption, combined with these big strategic blockchain innovations, are we now witnessing the inevitable integration of digital assets into, well, almost every facet of the global financial system, and maybe much faster than we anticipated? How might this redefine traditional finance, traditional investment opportunities just in the coming months and years?
It really raises that important question, doesn't it? If the largest university endowments, major corporations like BitMine, fintech giants like Stripe, if they're already making these significant moves, how long until it just becomes standard practice across the board? It strongly suggests a critical, maybe irreversible shift in how we perceive and utilize digital assets, moving them away from just niche speculation towards being foundational elements of the economy, perhaps even part of national strategy. It's a fascinating time.
Absolutely. Well, that wraps up our deep dive for this week. We really hope you found these insights valuable and that you feel much better informed about all the exciting and sometimes dizzying developments in the crypto market.
Yeah, thanks for joining us on this exploration. There's Always more to learn in this space, and we appreciate you tuning in with us.
And hey, if you found these quick daily crypto updates helpful, make sure to subscribe to the Nifty Noon X profile and also our Substack newsletter. You'll get more daily insights and deep dives just like this one. We'll be back soon with another deep dive into the information that matters most to you.